Good morning, traders. Welcome to another Flow Show. We just kill my squawk. We go. We write Thursday, 28th of August, already 2025. Before we dive into the news and what's happening in markets, just a reminder that you can still enjoy that 40% discount on your monthly subscriptions. So for those who are not yet in our community, no time to waste. Just as an example, yesterday, I know Blake sometimes shows it, but yesterday in our room, I won't show it. But yesterday in our room around that London 4 p.m. fixing, there were some really, really great trades being done. For those who are not yet in our community, I would say come and have a look because it's really worth it. That community is really one of the best on the net. We are also still inviting those who have not yet put their name and email address to do it on this page, where you will be kept up to date about all the changes that are coming, us evolving into trading analytics, and also you will be entered into a sweepstake where you can win a trader funding program, as well as I think a coaching session with one of our coaches as well. I'm not 100% sure, but I think we do have one as well to give away this month. So if you're not signed up yet, do it right now. Those who are signed up, you will automatically get your newsletters and get all the news. No need to do it multiple times, only once is fine. We are also still giving, I think until Monday or Tuesday or so, 30% off our trader funding program. So if you want to take either the one-step assessment or the immediate live account, as you can see here, you can enjoy a 30% off for a few days. So the link is up there. If you are on our page, you can just click that link and it will take you straight away there. You need to put in a code which is something with escape. But I need to check it. Just go on our LinkedIn handle. It is LinkedIn or X handle. Let me just try to find this back for you, what code it is you need to. Oh, it is, well, I'm not going to waste too much time looking for it, but it's escape work is the code that you need to put in to get that discount. Okay. That is it for the ads. Now let's move over to what's been said overnight. Um, Besant was on yesterday talking about on his, it seems to be like a daily podcast he's doing now. He wants to be online every day to remind people what he is thinking about. Yesterday, a lot was going on about the relationship with China. Everything is on the table, etc., etc. Actually, the Chinese said that they will send a delegation with top negotiators to the US very soon. I think that is something that can happen next week. So as soon as we will have a date, we will have to put that in our diaries because we obviously will get a couple of lines there on what their plans are. Although up to now, the meetings that they had were work group meetings, mainly to decide on whether to have a next meeting or not. So, but maybe next week, because it's one of the top negotiators going to the US, we will get some more lines there. Um, he was also saying that, which is a daily update now as well, that the replacements for Coco, the candidates for the next job as the FOMC head chair are ongoing, and that a few names will pop up in the days or weeks to come. So perhaps next week is going to be a pretty hot week for all of this, because also we will have the start of September where people, investors, etc., will come back from their holidays and likely will hit some buttons to start trading again. Moving over to, we also had Fed Williams out yesterday, bit walking the both sides of the line again. He's still feeling pretty optimistic about where the economy is. He sees growth of about 1 to 1.5%. 4.2% unemployment rate is still historically low. The wage growth is also still consistent with a strong labor market. And then he was talking about, but then also he said that there is a slowing in demand in the labor market. The hiring has come down quite a bit, so that is the more dovish side of things. He was also talking about the neutral rate, which he says could be like 1% or a little below where they are now. And so he says that the Fed is still in restrictive territory right now. What else did we have? On the central bank side, we had Nakagawa. She's a board member at the BOJ, talking yesterday or overnight as well, still on the cautious side. She's more of the neutral, one of the neutrals at the BOJ. This she just basically repeats what most of them have been saying already, that if everything falls into place, they can continue to hike rates. Staying in Japan, Akazawa, finally the negotiator for Japan on trade, finally canceled his trip this week, and he is planning to go to Washington next week. He says there are certain points that require further discussion. So, as we've already been saying so often here on the show, that trade deal has still not been put to paper, at least not from the Japanese side, which is perhaps still keeping the yen on more or less on the defensive, although we have seen quite a setback in the dollar yen overnight in line with other dollars. There's also been a survey sent out by the Japanese Ministry of Finance, sounding of the bond dealers on the super long bond reduction that the Japanese government may proceed with, and that would be a second reduction, because they obviously see that the long end yields rallying, and they rather would do the shorter end the shorter end of the curve to finance their debt, which is quite gigantic in Japan, as we all know. But this is kind of a second survey that they've been sending out to bond dealers. All right. In the meantime, we had a 2 years Japanese bond auction, which has not gone well at all, which is understandable, because if you shorten the maturities for your bond issuances, the bond players are not going to buy all your short-term bonds, because they think that they will get better prices later in when the Japanese government de facto shortens those maturities a bit more. And did I have a final one on Japan, perhaps? No, I think I've said everything about Japan. Quickly on China, PBOC is doing interesting stuff on their fixing. It's been a few days. It had been relatively stable, but it's been a few days now that they gradually bring the dollar CNY fixing down. And today they fixed at 710.63, which is another a little bit lower than the day before. This is one we have to keep an eye on, because that would be interesting if they try to guide dollar CNY, and by correlation, unless there is a lot of speculation going on against the CNH at some stage for economic reasons, but they are trying to guide it a bit lower, it seems, that dollar CNY and dollar CNH. So one to really keep a close eye on. Okay. Over to Mexico. Sheinbaum and her party are making plans for their 2026 budget, and they are planning to increase tariffs on Chinese sponsored, subsidized imports into Mexico. So that's um, another nod to what Trump was requiring from Mexico. So now they actually put it to paper, and it is in the plans to include an increase in tariffs on Chinese products going coming into Mexico. We know that they import a lot of stuff from China and then ship the finished goods over into the US. So that's something that her party is now planning for 2026. They have the two-third majority, so there should not be too many challenges from Mexican opposition also to challenge those plans. So that's also one to keep an eye on if you trade Mexican peso for instance. Then over to quick word on what's happening in Ukraine and Russia. We again had a pretty heavy um, bombing, shelling, droning of Kiev, and the EU, what should I say? The EU diplomatic mission actually came under fire as well, and the German foreign minister pretty strongly reacted to it, and saying that this cannot remain without a response. Also, yesterday, Germany's Merz came out saying that the Ukrainian capitulation will just give Putin the time to prepare for his next war. And NATO then came out also with some findings that Russia and China may be stepping up joint maneuvers to prepare for confrontation. So, from the geopolitical side, it's still not being resolved. Okay. Um, we know that Trump was trying to make some victory laps on how much he's selling into Ukraine and into Europe and into NATO, but it does seem that on the ground things are not really improving greatly right now. One little relief after all this French misery on their budget and their government. One little relief in Europe, and there was a bit of a risk there, is that the Dutch caretaker prime minister he won his confidence vote in the Dutch parliament. Okay, yesterday, so that is just one little positive thing that I could not refrain from giving to you regarding Europe. Um, oh, yes, and then Macron staying in France. Macron, speaking to EU leaders, said that the EU should now consider retaliatory measures against the US after the Trump administration threatened to impose tariffs or sanctions over those tech regulation and taxes, right? Um, he also said that EU has a big services trade deficit with the US. We know that. On the other hand, they have a big surplus on the good side of things, obviously. But Macron is trying to be the bad cop in EU and still trying to lead EU on that front as well. We know that the EU is planning to lower those tariffs on some tariffs from US imports, but it still needs to get voted through. Okay, so that is something that we will need to also watch because it could have obviously an impact on the trade relations, and especially we will have to listen closely to what Mr. Trump and his administration have to say about those lines. Okay. And I think those are going to be. Oh, yes. This morning we had just a little while ago we had the ECB's Ren on the wires as well. He actually being one of the or having been one of the ultra hawks in the ECB is now saying that the ECB remains ready to act if needed. The euro area growth has remained resilient. We heard that already over the weekend from Mrs. Lagarde. but he said inflation is slowing, so that is something that they need to be mindful of. He doesn't also about the dollar there. He was asked about the dollar coming down. He said he doesn't think that there is a threat to the dollar dominance, but then he had his own comment about the Fed independence and saying that the Fed independence crumbling would inevitably push inflation up and be a very big risk to global markets. Okay, so he's also warning against that risk that we've been talking about as well, regarding to what everything that is happening now with the administration, U.S. administration involvement in the Fed. And that's basically it on the headlines. So we can move over to what's happening, what's happened, and what is going to happen on the data front, because we do have a bit of an increase in the data frequency coming up for the end of this week, the end of this month. So yesterday we had the oils coming out. It did not move the needle too much. I recall that the crude oil was at 63 three quarters when that news came out, and it's again, it has moved a little bit, but it's again at 63 three quarters. Okay, so that did not impact much. We had the 5-year note auction out. That was not as good as the 2-year the day before. So that was a little bit worse than the one before. Let me just correctly see if that if what I'm saying is right. Yes, we had a small rather small tail of zeros, 0.7 bps. Okay. Um, then we had the bond flows out. Little negative here, but it not really a huge amount. This is in yen, obviously. This one, so it's not a huge amount that has been sold on the Japanese side of bonds. ANZ business confidence in the Kiwi ticking up a little bit. We have seen Kiwi dollar also going up yesterday, but if you look at compare it to its Australian cousin, it's still not overly impressive, I would say, because Aussie Kiwi is still slowly ticking up. As we can see, it's trading above 111 still. We had the Nakagawa that has been done. We had some car registration numbers. Okay, still sluggish, although the German one was pretty better. Those are not usually numbers that move the needle unless we got like a globally speaking one-sided picture. But this is more like a pretty mixed picture in French. The French are still quite miserable, by the way. Swiss GDP a little weaker. It's still Q2 numbers, okay? Still Q2 numbers, a little weaker than what was prior posted and what was expected. Just around the flatlining here. But we have already seen yesterday as well. I was talking about those Swiss Zoo numbers that it's those data for the time being have very little impact on everything Swiss, okay? Italian business confidence sort of in line with the expectations, a little higher on the business, a little lower on the consumer, nothing too much to look at over here. And then what else did we have? Yes, we had the European business climate coming out as well on the hour here. Services sentiment ticking a bit lower. Industrial sentiment still largely remaining in the negative territory. Okay, and that is also obviously holding back this the global business and consumer survey from going higher. All right. And then what else do we have? And then we can look out to what's going on this afternoon. We have another revision of the Q2 data in the US. Yesterday I thought for a minute that we would have Q3 preliminaries as well, but I don't see them on here. Maybe I missed something. If somebody has more information about that, or if I missed something, just don't hesitate to put it on the chat. Um, it's another revision, and it is. Yesterday, I heard those rumors about Q3 data being kind of okay, but it doesn't seem that we have those data out already. No, it's all going to be Q2 still. Then we will have the jobless claims out as well. A lot of it is being made sometimes by the retail community. I don't think it's a big mover unless this thing is starting to creep above 250, holding above 250 and creeping higher. But the one that we might have a closer look at is those continuing jobless claims. They are a week delayed versus the initial jobless claims, but they have been creeping up. They have been creeping up. And if you could excuse me just for 1 second. I need a sip of water. No, sorry, I'm back. They have been, let me put that one tighter. They have been slowly creeping up, okay? And I'm not going to say that the market is going all ballistic if that number would climb above 2 million, but it is something that may just catch the attention if that number starts to creep towards and especially above that 2 million mark. Okay, if it stabilizes here, I think it's just going to be just another couple of numbers written on a calendar, and the market will be moving on. We will have pending home sales out as well. We have the Kansas City Manufacturing Composite Index coming out. Also not a data point that is usually moving the needle a lot. We will have some more auctions later on today. And then we will have Fed Waller on the wires as well. He's one, remember, he's the one that definitely has thrown his hat into the ring to be a candidate for the next Fed chair. So it would be a surprise if he doesn't come out dovish at all. Okay, but that's for much later today, towards the close of business, actually, in the US as well. Next, we will have the Tokyo CPI data out and the industrial production in Japan. And as I told you, industrial production numbers have been and usually are quite up and down. So take them with a pinch of salt. But we do have the unemployment rate, and we know that the jobs market in Japan is still very tight. So that may have a little bit of an impact if we see any direction here in the jobs to applications ratio. But again, this thing has been extremely stable, so it really will have to move, okay, to have a material impact on the yen. We will have retail sales as well in the July retail sales in Japan. And what else do we have on the docket before? We will have, before the next flow show, we will have the German retail sales. We will have the import price index as well, which is going to be quite interesting. We will have, again, another round of Q2 GDPs and out of France. But we will have the inflation data coming in from Europe then, okay? The French HICP for August is coming out. The Spanish one is coming out. I think also, again, exactly, we've got the German one coming out as well for August, so that may be a mover tomorrow before the next flow show. And then we will move over into the Friday afternoon tomorrow, where we will have the PCE data for the US, but we will talk about that tomorrow. Okay, that is it for the data, what we are watching. So what has happened? And what has happened, and I was talking about that on the top of the show, about the community and ForexAnalytix. And yesterday, already on phase I had been hinting at the possible trades that I was looking to do, Blake as well, and people in our room as well have put on those kind of trades. We were very closely looking at what would happen into and after the 4 p.m. London fixing, and look what happened. Going into that fixing, here it is. That's the 1500 hour. Um, it's like this is GMT, okay? So this is the hour of the fixing, and then afterwards, and most of us, I'm just taking the euro dollar as an example, but most of us were looking at the dollar short side of things, and we have been pretty successful on that. Now, that's done for the victory laps. Now, we are still in that range. Okay, we are still building the building on the range. We are coming back to the middle of the range in Europe. Data, yes, I'm not sure of those Q2 data will really move a lot in the US, because it's really in the rearview mirror data, because everything is still ongoing and has been ongoing in Q3 in regards to trade, etc., etc. So I'm not sure that they will move a lot. So watch the clock again. I would say watch what's happening in those fixings. We had decent indications on what may happen, and dare I say, not a lot may happen, because the signals of most of the analysts are very, very small. So it could be a bit of a flip the coin month, and I would say that there is still a potential for to seeing a little bit of dollar selling coming into month end, but it may be just the one and the other currency here and there, not specifically the big dollar block, if you see what I mean. It could be a case of like a couple of flows here and there, but always keep in mind, if you wonder what's happening, which something that is not in the norm of what's been happening in the hours before, just keep that eye on the clock today, tomorrow in the fixings. It could always have a little bit of a move. As I said, in the meantime, inside the range. 116.60 still your hinge around which this euro dollar is trading. That has not changed. Okay, yesterday and the days before, I was already saying like those ranges, this range is still very tradable until we break above 117 and a half, or below 116, or sorry, below 115 and a half, 115.60. That range is still very much tradable. Inside we have like minor levels, 116.10, 117.15. But yeah, for the rest, this is one that I've thought that we may start to build after that drop here, and then back into the 115s. That was what I was kind of expecting that would happen last week, and it is even the week before, and it is happening. Okay, so this is a very tradable range. Watch out though if it breaks. And adding again, since it is month end, and September should be a very big month on that side, and also with investors coming back, it could be that there's not a lot standing in front of those month end flows. So it could be, I'm not saying it will, because as I said, we are expecting very low signals for the month end flows. But it if it goes outside of that of the range by any chance at the time of the London 4 p.m. fixing, it could also end up being a fake break of the range. Okay, so keep all of that in mind. Cable exactly the same, but holding, in my opinion, well, yesterday at least, because the euro sterling was coming down, it really held well at 134.20 around. We just had a quick dip below, and then started to move up again. So this is one that I've been trading, still in it for bits and pieces. But the ranges are still there as well. Okay, I doubt that we have really the power in this move to get back up to 135.90, 136 for now. But we never know. Okay, headlines can always hit the markets, and then it could fly. So again, a tradable range. The underside is already 134.20 now a couple of times, but we have another one at 133.90, another level at 133.65.70 on the underside. And on the top side, we have that 135.40, which kept pretty well last Friday, okay, when the dollar was weakening on Powell. So that is also, I think, a tradable high. If it flies through, then we're going back to that 135.90, which is still the gateway for 136.5, which in my opinion could be tested before we peter out. But that is, I would not think that it's reachable a day like today, for instance. Okay, so it's still inside the range, but we can trade those ranges. Same thing on the Aussie. Okay, we broke below this trend line, and yesterday I said that there was a risk for this to happen, but I also said there is a pretty sorry, no, I'm on the wrong one. So we've broken below the horizontal, sorry, here 64.70, but I also reminded you of a traffic zone down to 64.40 even, okay? And thinking that it may come into the zone and then bounce. Well, it just entered the zone and then bounced. So I'm riding this one as well. Already took some slices off, as I usually do, because we still need to break above levels here, and I always bank partial profits on whatever I do. The positive here is that we, after all those little spikes that we saw and which could not hold above 65, the positive here is that we broke it above, we went close to it again, and now we are trying to build on it. So this would be the interesting one for the Aussie if we manage to build on 65 now. Okay, again, month end, again, data coming up, we could go back down here and then somewhere trade the bottom end of the range again. It could obviously, and that for the real short termers would be seen as a bit of a failure on the Aussie, and they're probably going to get out of it, and then we can trade back down there and then start all over again. I would say that only under 64.40, even though we have prior lows here, but under 64.40 it would start to look a bit fragile, and that, okay, we could revisit low 64 and then bounce, but if it goes back below 64.40, in my opinion, it would start to look more fragile. But in the meantime, I'm okay to continue to trade what we have been trading yesterday. Obviously, we still need to break back above those levels here, 30, 45, 65 in the Aussie. We know that it has been struggling with some of those levels in the past. Still has to go, but I would say there is a small positive potentially developing on the Aussie. Kiwi as well, but less so. Because as I said, we are seeing this. Just going on to the shorter time frame. We are seeing this Aussie Kiwi gradually climb. So the Kiwi is not as impressive or not as positive yet as the Aussie. And as you can see, it has a different structure than the Aussie as well. Okay. Yes, we had the bounce. Yes, it was a decent level, that 38.2. Yes, we had the bounce, but opposite to what's happened in the Kiwi, in the Aussie, we did not break yet above this 58.75.77, and that is going to be a bit of the key to further success of this Kiwi dollar pair. It could just stop there, and we trade in this relatively tight 50 pips also range on the Kiwi. If it breaks, then it would look more positive for a move back into the um, do I sound cut out, Fred? Anyone having problems with my sound? Just let me know if anyone else has an issue. Okay, thank you guys. So here, if it goes above the 75, 78 level, let's say, then we can have a move, hope for a move back into the 59s, but it is looking less buoyant than the Aussie still. One that has really given it up is the Canadian is the dollar CAD, and I thought, okay, there is maybe some positives on the trade side. Canada is trying, Carney is trying to get things done. But that one was a pretty big drop on the dollar CAD, and it broken through some decent support here in the low 138, around that 138.15 that had been traded a good fair number of times, which is also a FIP as well. So through here, that was a pretty decent break and really accelerated on the breakdown. Okay, let me just go on to the. It had been actually it's also started around the fixing time. That may be that just after the fixing, it may be that there has been some Canadian involvement also. We know that they have some pretty big Canadian asset managers and pension funds as well. It may be, but this is a pretty decent break. So I guess below this level, there's been a round of stops that's been triggered. It is going to be, I reckon now, it is going to be a really decent resistance, meaning that if we break back up, this could all have been like a correction, but it does feel to me like a really decent break. So I think on the day, if ever we get back up to that 138.15, we are going to find sellers first thing around. Next support is coming in at 137.5. That's the middle ground of that rally that we saw from the 135 three quarters. Okay, the midpoint is coming in at 137.5. Nice and easy number. It's also been a level that's been traded before. Okay, so that's going to be the interesting one on the day. We are trading about 20 pips above, so keep that in mind. And under there, the low 137s. Again, I was actually kind of surprised to see this amplitude of the move yesterday. I haven't been in this one for a while. Had seen this top forming here, but couldn't possibly trade it on the overpower, and then I was actually a bit too conservative with my levels, trying to get back up here also. But no, this actually took me a little bit by surprise, and I guess looking at the amplitude of the move, it took the market by surprise as well. So let's see what's going to happen here. 138.15, 137.5, 137.20 are the levels that you need to pay attention to. Okay. Um, dollar makes, where are you? Dollar makes has rejected that. Well, we didn't get into the 80-84 zone again, and it has rejected it again. It's trading back down into the 1760s. We know where the levels are: 1850, 1880, 1885. Again, I said about Scheinbaum trying to give the nod to Trump. This may actually end up being a bit supportive for the MEX. I mean, depending on what the dollar does for the rest of the day, maybe that we are testing back down there. Will it have the power to get through? I'm not sure right now. But again, I would say it is still within the range, but the tops are also coming down a bit yesterday after that quite solid rally on all the emerging market pairs, like the rand as well was rallying quite a bit yesterday, but the dollar mix gave it back and gave back a bit more than the dollar rand is giving back, for instance. Okay, so that's my rand mix still doing all right there, slowly slipping down. Deresh, are you around? Um, Usually the rage is always asking about the metals, but yeah, gold yesterday, as I said, 70.73 your support. We've tried it, tested, and then we gradually moved higher. Hi, Marcus. it gradually moved higher, and here we are, back at 3,400. First little try above 3,400 has been okay, not really rejected hardly, but we are trading a bit lower here now, around 33.95. But it is a level to reckon with, yeah. As I've been saying, this is the prior top here. Anywhere between 3402 and 3409 could be enough on the day, but it's still looking positive. All right, for as long as we, a bit like the Aussie, if you want, building on a level. Aussie 65 here, that's 33.70 73. We've been building on it, okay, since Tuesday, and now we have seen this move up into the 3,400. It can be enough right here, and we mooch around in this 30-40 bucks range. It is possible. Overall picture though remains relatively positive. If we get above this zone here, I think those next those prior tops here will be well within reach. 34 40, 34 and a half would be well within reach if we break that prior top here. Maybe a step too far right now to get back to 3,500, but if you look at the move here, it is still pretty it is still looking pretty good. Volatile, yes, but that's the nature of the beast, okay? Within this 20-25 bucks range, okay? But it's the nature of it. Silver did a quite surprising put in a quite surprising rally, but and then I just noted that there was like a lot of on the 4 hour moving average cluster of moving averages here. And then I was looking back more to the left, and that 200 moving average on the 4 hours seemed to be one that the market likes to trade. Yesterday we touched it again, and from there it rallied. So I was wondering how long the consolidation would last. We did have a bit more as I expected, but then it jumped quite just a little bit too high to start to re-enter for me. But this is a quite a nice jump, and it's confirming to me now, at least, that this is still a correction. One of those corrections that we see in silver often. Okay, we see those often. That $1, one even more, a dollar correction. That is possible to see that in silver. In percentage, it's quite a bit, but the silver market is not a huge market. Okay, so this is still possible to see. The way it trades here, it does give me the impression that we may be in for a retest of the trend line here, which comes in at around 2025. 39.2025 is going to be a level I'm closely watching. That would be, of course, reached if we break above that 39.05 high that we did the last time. Bottom side 38.10, and then here that 37.90 is going to be one to keep a close eye on. Anything else that you guys want to look at before I close the books? Because I think I've showed you everything I wanted to show you. Maybe a last little look on the dollar yen Swissy. Last look on the dollar yen. It's trying. We see those persistent bids at 147, but is it going to hold? 146.80, 146.40. Those are your levels below. If it starts to break 146.40, that may look a little bit less of a range play, and then we could potentially trade a bit lower. But until that happens, that is still in the range. Swissy, as I said, I mean, Euro Swiss is really a miserable pair. We have been trading lower. I think this has to do with month end, so that's going to be deciding what's happening even on dollar Swiss. You have the both ends, but the fact that we are back here below this 80 and a quarter is looking to me a bit fragile. So is this going to be the theme for month end, or is there something else happening? I would still call it month end flows for now. But it's possible that we are going back to that prior low here, which is around 79.90. to get moving higher, we know which levels have to break. Yeah, it's 80, 81, 81 the figure. But for the time being, this does not appear to me like a pair that that wants to break up. Okay. Oh, Marcus, I am not watching it. Rare earth ETFs. Maybe you can ask that question in our room, because I'm sure that some people are looking at rare earth stuff in our room. Maybe Stelios also. Just ask the question in the chat room, Marcus. And if anybody else is interested in that REMX rare earth ETF, well, what are you waiting for? Enjoy your 40% discount on your monthly and come and see what people are saying about it. Okay. Thanks everybody for your presence on the Flow Show once more. We will talk again tomorrow for the last day of this month of August. Thanks everybody. Have a good day.
Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.